It's about that time of day again. My name is Joseph. Monday evening, June the 11th. Welcome back to your nightly newsletter. My job tonight is to help new traders earn consistent profits using simple and reliable trading strategies. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. Tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish and trying to complete a large measured move target later this week. And in the meantime, I have my eyes on a hidden channel for the most reliable buying opportunities on the way higher tomorrow morning. The S&P is also bullish and trading at the low of a wide channel tonight. That tells me that momentum is now moving lower. So my plan is to look for buying opportunities using seller failures going back up to that high tomorrow morning. Nasdaq is also bullish with a much narrower spike and channel pattern than its Emini counterpart. And that tells me to look for buying opportunities using a hidden support trend line, and I'm waiting for a two-legged pullback to do it. You want to stay tuned for more of that Nasdaq in just a moment. Gold is range bound and trading at the highs, and I'm looking for selling opportunities going back into the range. But first, I need to wait for the buyers to finish off their two-try rule tomorrow morning. And last but not least, the euro is trading sideways with a potential triangle pattern setting up for tomorrow. So my goal is to wait for that moving average to flatten out and start fading those breakouts on Tuesday morning. Boy, oh boy, we have a huge week of trading opportunities ahead of us in this third week of the month of June. We get some non-stop news events Tuesday, Wednesday, Thursday, and Friday, and it is sure to keep this price action moving well for us. Before I jump in, though, I got a great newsletter in store for you guys and gals tonight. We have a ton going on this week. This is not a week to be missed. Before I jump in, though, and put the charts together and put the plan together for Tuesday's session, I need to remind you, if you're watching me on YouTube right now, you can find a detailed description of this entire trading strategy written out on my blog right here at sidewaysmarkets.com. Also, if you have any questions about anything covered in tonight's video, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing to my channel and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything going on here at School of Trade, right, we get a lot going on every day, head over here to the blog at sidewaysmarkets.com, right, and make sure you join our mailing list. I'll put the link in the description of that YouTube video. Head over here to Sideways Markets, grab that mailing list, give me your name, your email address, and I'll shoot you an email every evening, right, when I publish anything new here at School of Trade. Also, don't forget, did you know I post stuff all day, every day, 7 days a week on my social media channels. If you like trading, if you want to come right along with me on this ride, right, follow me on social in the lower left-hand corner. And how about some charts from tonight's video? How easy is that? All the charts from tonight's video, have them on your computer for tomorrow's session. Download those charts and be ready for tomorrow's trading by following that link below the video tonight on our blog. And how about tomorrow's trading? What are you waiting for? Grab that free pass in the upper right-hand corner. If you'd like to learn more about our strategies, if you'd like to see what it's like to be in our trade room using the same patterns right there along with me, grab that free pass in the upper right-hand corner and come out and join me in the trade room, right, for a training session on how to use our three-step strategy. And don't forget, if you got any questions, hit me up on live support. I'm always here to help. Right, hit me on live support. I'm always here to help answer all your questions on the right-hand side of our website. All right, let's break this sucker open here. We got a lot to cover here tonight. It is great to have you guys with me here once again this evening. I hope you had a great weekend out there. Boy, I'll tell you, as far as weather goes, it doesn't get much better than it did this weekend here in LA. It's sunshine, warm weather. Boy, was it nice here this weekend. Hopefully you guys had a great weekend as well. Let's see what we're dealing with here this week. First of all, it's important that we recognize 1, 2, and 3. The 15th of the month, right? That is, of course, this Friday, is what we call quadruple witching. Now, we talked about this last week, right? But every 3 months, March, June, September, and December, the third Friday of every 3 months is when all 4 asset classes are going to expire, right? This is basically OPEX on steroids. Now, this is important because as we get later in the week, we typically start seeing volatility start to increase as we go into this quadruple witching Friday. Now, it can be pretty unexpected stuff. So as we get closer into this week, we'll start kind of incorporating more of that right into our trading strategy. But be aware, as we get later in this week, we do expect to see volatility kick up right as we go into those last few drops of what's known as right quadruple witching. The third Friday of every 3 months, March, June, September, and December. And of course, even though that first day of the month was a Friday, right, we still have that being right the third right Friday of the month, and that of course is this Friday. So as we get closer, increased volatility, right? Increased volatility. Now, what else do we have going on? Well, it might be a shorter list of what isn't happening here this week. Let's see here. Tonight, right, in the overnight, obviously I'm here in the U.S., but in case you haven't picked up a newspaper, in case you've been living under a rock the past few months, right? We have that U.S. right North Korea summit happening right in Singapore, right? So we got the summit happening again. It won't be tomorrow, but it will be kind of it'll be early, right? It'll be obviously morning in Singapore, overnight for us. So tomorrow should be nothing more than news headlines and rumors. I'm sure Trump will say something crazy. I'm sure Kim will do something crazy, right? I'm sure there'll be something newsworthy, right, coming out of that. The big thing really tomorrow is I would expect a lot of people are going to be distracted by this tomorrow. So we may see a bit of a weird session tomorrow because anyone who tells you they know what's going to happen based on this summit, right, is lying to you, right? And there's no way to tell with those two people in the room, right, Kim and President Trump, right? That is a powder keg of who the heck knows what's going to happen tomorrow, right? So we are expecting to see some volatility because of it, but it will probably be kind of riding on the headlines. Headlines come out, markets move, we react to them, so on and so forth. So tomorrow, right, going to be starting to see that wake of the right, kind of in the wake of that summit, right, in Singapore. Then on Wednesday, right, we have the FOMC announcement, right, on Wednesday, the FOMC announcement on Wednesday. Thursday, we got the ECB announcement. This is potential to be a huge ECB announcement on Thursday. The Fed is expected to on Wednesday kind of prepare us for raising more rates. So the Fed on Wednesday, the ECB is expected to finish QE. They're expected to stop buying bad debt on Thursday, and then Friday we have the again the FOMC, the quad witching. Right, which of course is a whole other batch of volatility here this week. So we've got the old double date with Trump and Kim, the bromance developing there tonight and tomorrow. We got the FOMC. They're expected to talk about rate hikes, which all hell breaks loose in gold and dollar, right? We're talking about rate hikes. ECB's supposed to be, right, announcing the kind of completion or the plans to complete, right, their QE. Only took them 15 years. I'm kidding with you. And of course, right, quad witching, right, is on Friday. So like I said earlier, there's a lot going on here this week. If I had to guess, I would guess this week's going to be filled with kind of times where things are slow, but they'll be, probably 30% of the time will be very, very tradable. 70% of the time is going to be a little bit choppy, right, just because there's so much going on. So the real thing you got to think about this week is keep patient, because there may be times when things are slow, but stay alert, because there will be times when we get big moves that we definitely want, right, to try to take advantage of here in this third week of the month. Because again, quad witching, we're going to see a kick up, right, and that volatility. So busy between the summit FOMC, ECB, quad witching, right? I've heard traders call this the week from hell. I think it's the exact opposite. I think this will be the week of great opportunities for us, right? And we'll see, of course, tomorrow morning, starting off at 8 o'clock Eastern time. Tomorrow morning, speaking of tomorrow morning, we got the CPI number at 8:30. Remember, CPI deals with inflation. Whenever we hear about inflation, the Fed has to manipulate the money supply. That affects the dollar, which affects gold, right? Which, of course, affects everything else. So big news tomorrow morning at 8:30 a.m. Eastern time. And of course, tomorrow night, right, we'll talk more about Wednesday, Thursday, Friday news as we get closer, right, to tomorrow. I can't sleep tonight. I'm so excited to see what this world is going to look like, right, tomorrow morning when I wake up. I'm expecting to see some very interesting headlines when I get up tomorrow morning. Very, very excited about this week, and you should be too. There are going to be quite a bit of opportunities, right, as we go into the end of this third week of the month. All right, calming down here for a second. We got some work to do. Here. Let's jump right in. We got crude, S&P, Nasdaq, gold, and we can't forget about on the euro tonight. Starting off tonight on crude, crude is bullish and trying to finally break free of this large trading range it's been trading within for the past few days. The bulls have the momentum on their side right now. You can see that strong move higher. So the bulls definitely have momentum on their side, but I don't want to buy into these highs. So I'm using a hidden channel to identify more reliable buying opportunities on the next pullback. Now, I have to say, the day today began as a trading range, right? We saw a big pendulum swing down. We're seeing a big pendulum back up. And it looks like we are all right in balance of what may end up being a crash back down and settling into that trading range. That was the initial, my initial instincts told me we're going to trade this like a range tomorrow. But then I took a deeper look at this chart. I think it's worthy of your attention as well. If we go back a little bit, we can see what's happening here right now, right? Remember we had this big move down, right, from last week, and we sat in this trading range, right? We rotated back and forth. Well, at the end of last week, we were up around the high of that range. And if you recall last week, I said eventually we're probably going to end up collapsing back down to those lows around 64. Well, you can see they really tried once and twice, and they got nothing accomplished. So when I look at this, I see this bigger range, and I think to myself, boy, there's a lot of momentum here, and those buyers, they're not giving up on this. They're not allowing this to finish that rotation. And, there's an OPEC meeting coming the 22nd, so maybe this is some jitters ahead of OPEC on the 22nd, but the bottom line right now is what I do know is I do know that we have some definite momentum that we have to respect here to the upside. So I think the buyers definitely deserve our attention right now. As much as I want to keep trying to sell this market back down to the low of that range, I mean, how many times? Well, you can see, right? Strong move down, right? They couldn't quite finish that move down to that range. Okay, so knowing this now, right? Knowing this, that buyers, for whatever reason, right, are still very much in control of this market. Now we see this strong move, right, coming off of today's low. Now, as I mentioned earlier, this could be nothing more, right? This is the way we traded it today in the trade room, right? It could be nothing more than a pendulum swing down, pendulum swing up, right? And we may find ourselves right back into that trading range. But again, I don't think that's the bigger picture look right now. I think we have enough proof now of buyers, right, holding these pullbacks to think that something here is wrong to the downside, and I want to be part of this move going higher here. So the market's bullish, right? At least from what I can tell right now. We may end up sinking back down tomorrow. I'll know more than that. Well, I'll know more when I see more tomorrow morning. But for right now, momentum is running higher. There really isn't much of a channel here to work with. So what I'm doing is I'm looking for a level of support to start buying at. I don't want to buy high here because, remember, we're at the top of that big range. I don't want to buy up here. I want to wait for the market to pull back off these highs. It's a bull market. I want to buy at support. So where can we find a level of support that doesn't require me buying up here, right? Because that's not obviously where I want to be buying. They rejected there earlier. So what I'll do is I'm going to mark up these two highs. I'm going to bring it down to this low and look at how well that low lines up, like a glove. And usually when you find examples like this where that low, right, those two wicks down there line up beautifully, right, up at that high, typically that tells you there's a bigger picture channel out here, right? Put the midline on, midline fits a glove as well. So I'm looking for price to now to come down, right, into that channel low so I can buy it right back up. We got a strong move down. I'm looking for a measured move now going higher. That measured move, again, if I zoom out a little bit further here, right, a little bit further here, you can see I get the measured move now drawn up, right, off of that low, up to that high, down to that low. So that measured move up around that 66.80, 66.85, it lines up with the prior swing high there. That would be an easy level for those buyers to be hunting for here tomorrow. So again, kind of a long-winded explanation here because I'm sure many of you guys are like, well, dude, we're at the high of this range. Do you really want to buy up here? But the reality is, right, we've got, again, the sellers had their chance, right? They had their shot and they bobbled it. I have to assume, right, there is more interest going higher than there is going lower here. Now all I have to do is find that level of support. I want to buy down the low, right, of that channel. Now, how could we do this, right? What would be some opportunity here we get, right, to buy that low? Well, one of the things that's easy to see is if we do end up down to the low of that channel, the momentum is going to be quite strong, right, going lower, which means you're likely going to have some sellers now who are trying to sell that reversal, right? If I was a seller, I'd be trying to sell that pullback to the moving average. So my plan is to get this momentum going lower in the short term, obviously, get those sellers to try to sell the next pullback, combine that with the low of this channel, and I can now look for one of my favorite opportunities, which of course is a 2-try rule. 1 try, 2 try going lower. We find out where those seller stops are, right? If I was a seller, my stop would be up above, right, that high somewhere, and I'm going to be looking for buying opportunities now to buy into those stops. Now, as I buy into those stops using a seller failure pattern in a bull market, we then bring the moving average over. And with that moving average coming over, now I can look for that buy off the moving average. Again, trying to use the low of this channel, right, as my guide. Right? So looking at this as basically a seller failure into a buyer strength. That buyer strength now gives us the confidence here, right, to be buying on those pullbacks, right, on the way up, right, to that measured move, right, that I mentioned earlier. So that's where I'm looking for price as it pulls back. Now, real quickly here, right, talking about failures into strength into pullbacks, I'm going to use quite a bit of terminology tonight that if you're brand new here, you may not be familiar with. So if you want a nice little shortcut, right, an easy way to kind of catch up with things you might have missed already, I'm going to put a free trading class in the upper right-hand corner here. Grab that free trading class, pause the video, grab that free class, register for that free class because that class will teach you how I draw channels, ranges, the techniques that I use for technical analysis. It will also teach you all the entry patterns, failures, strength, pullbacks, and of course, right, trap patterns as we go. So to get the most out of this newsletter, grab that free class in the upper right-hand corner. You'll notice the information icon will be there for the rest of this video, and I'll see you guys in that free trading class. You're going to love it. You're going to love it. You'll get a lot more out of this newsletter by being able to understand more of the terminology, right, that I'm using. So that's if price pulls back, right? Price pulls back, looking for a buy there. What if the market doesn't pull back? Well, here's some scenarios to consider. First one will be we don't pull back, we go back to the high, right, and then we pull off the high. Double top, that creates a trading range. If we see a trading range with a double top at these highs, then I focus on buying down below that low. To do that, I look for ultimately the same pattern. 1 try, 2 try, failure, and then back up from there, right? So if we do see the market double top at this high, right, stay patient. wait for the pullback, and buy low. Again, trying to incorporate this trend line as support. Another option could be, let's just say we keep going higher here, right? We make a new higher high now. If we go up and make a new higher high now, I'm going to draw that channel off of these highs. I'm going to pin it down to that low. And I'm going to look for buying opportunities now at the low of this channel or with traps below the low of that channel. Right? So keep an eye out for these two buying opportunities. Again, if we see some higher highs here, right? So if we do keep going higher, don't just buy it, right? Buy at support. Remember, that's the one thing I hope will rub off on you on this newsletter is that I'm not going to be someone who buys high. I'm not going to be someone who chases after a move. I did that 10 years ago when I was learning, right? We've learned our lessons over the years. We always wait to buy, right, as support. So whether or not the price goes higher, right, higher, look for a spike and channel, right, and buy the low of that channel, or price pulls back, right, down to the low of that channel, one try, two try, failure, strength, pullback, or maybe we end up going sideways here, right? Look for that move lower, right, and buying below the low of that trading range. Last but not least, how do we turn bearish here? What does a bear market look like? Strength moving lower, pull back to the moving average, right, and strength moving again, right? It's a three-step strength, right, three-step reversal. It's a strong move going against the current trend, right? It's a test of the moving average, right? And it's a strong move off the moving average. Now remember, if those sellers can't hold that pullback, what's going to happen? It's going to go right back up to retest that high, right? Like we saw back here, right? It'll go down, and then bam, right back up to retest that high. So that could easily happen. Down, down, bam, right? Back up around that, right? Around that moving average. Don't be on the wrong side of that move, right? Strong move down, pull back to that moving average, right, and then run through. Once we see that, we don't chase after it. We sell at resistance, right? Find my new channel. You're going to draw that channel off of the lows, and you'll look to sell up off of that high. It's a relatively easy trade when you get the reversal. But it needs to come after we get the reversal, right? You don't want to try being the one guessing and predicting that reversal, right? Because it will usually stop you out, take your money, and go without you. So we got the plan here for the bulls and the bears. Tomorrow should be an interesting day. I'm looking forward to a pullback here so we can buy nice and low. If it does run higher here again, wait for that trap, wait for that pullback, right, and buy forward from there with that measured move target waiting overhead. All right, how about some S&P here now? Running a little bit late on time here tonight, so I appreciate you guys sticking around here with me. The S&P is bullish and trading at the low of a multi-tiered channel, telling me to have a nice deep pullback, and we should start looking for buying opportunities going back up to retest those highs. And my goal is to use a seller failure pattern to get this party running back up to those highs tomorrow. Now, I purposely zoomed out on this chart so I could show you this big multi-tiered channel. This entire channel is basically drawn off of these highs. There's a midline, which for the most part, right, has been a channel in itself, right? You can see this has pretty much been its own channel here for the past 2 trading days. But look where we are right now. If I take that high, I bring it down to that low, right? This creates kind of like a hidden channel, right? And you can see we are right down at that low right now. So again, the market is clearly bullish. I want to be a buyer, but I don't want to buy at resistance. I want to buy at support. So now that we're at a level of support now, right, we're at a prior swing, we're at a rising support trend line. Heck, we're even at a trend line here acting as support here now, right? What's the best way to trade this? Well, the easiest way to do this is to look at this strong move coming back down. Now, I can guarantee you, right, my 12-year-ago self will be trying to sell this pullback, right, because I'd be convinced that lower lows, right, and lower highs mean a bear market, right? That was the rookie version of me, right? The more experienced, the much more experienced version of me says, look at the bigger picture. right? This market is way too bullish right now for me to try to start selling now, right? I'm not on the wrong side of this yet. Now, this could easily turn around and go lower here tomorrow. But as of right now, momentum is way too strong to the upside. And therefore, I'm expecting there are going to be some sellers who don't know how to read a chart properly, right? And are probably going to try, right, to sell that pullback. Right? And that's exactly what we're hoping for here. Because if we can get the bulls, right, if we can get the bears to sell that pullback, now we know where their stops are. And in a bull market, when sellers get stopped out, this thing races higher. Because the sellers, right, when they get stopped out, what happens? They have buy orders triggered, right? How do you get out of a short trade? You're a buyer. So you buy your way out of that short position. That creates what we call bullish strength. That bullish strength now gives the sellers a reason to flip around and join the buyers. It also gives the buyers now a chance, don't chase, right, and buy that pullback. So again, the two patterns I'm looking for right now starts off with, I want to see that next pullback to the moving average. I want to see some sellers try to sell this thing lower. Then we'll look for that failure into strength, and that strength into a pullback, and that pullback, right, going up to retest those highs tomorrow. Right, so that's the ideal situation right now. Let's get this thing back to the moving average, right? Let it try to sell off. Let's get it through, up and over, and buy from there. Okay, well, what about this? What if we just run higher, right? What if we just run higher here? What do we do here? Right? What do we do here if the market, instead of giving us a beautiful pattern to use, what if it just runs, right? What if this sucker just runs? Well, if we see this thing taking off to the upside, there's a lot going on, right, this week, so this easily could just take off to the upside. If we see a real strong move here going back to the upside here, now look left and look for what we call trap patterns, right? Look for those trap patterns down below, right, those prior swings. Now, again, I talked briefly about this, right? If you want to learn more about trap patterns, failure patterns, pullback patterns, everything we do here, right, grab that free trading class, right, that little information icon, register for the free trading class, take that free trading class, and I promise you, right, you'll be trading these patterns. You could be the one teaching this class, right, the next time I send out my nightly newsletter. So that's if the price pulls back, or sorry, that's the price goes higher here, right? So looking for that failure into strength, strength into pullback and pull back higher, right? If it just goes without us, look for that, right? Look for that trap, right, and buy back up from there. Don't buy into this high, right? Very, very important. And then last but not least here, is there a possibility we might turn bearish? Absolutely. There's always a possibility for it, right? What would that look like? Well, look, we already have a strong move down. So we got that out of the way. Now all we need is another, right, strong move through. If we see a strong move through, now we can connect these lows, and we can look to sell off of that high. The key though, right, the key here is this move lower has to be very strong, right? Look at how strong this move higher was, right? That's what it's going to look like, right? It's got to look strong like that, right? Because if it isn't, what's going to happen is it'll go down, right? It'll stall out, and then it'll do it again, right? Failure, strength, and pull back and go back up. Right, so be very, very weary of a little head fake, right, as it goes lower. Again, momentum is way too strong to the upside right now to be trying to predict this market reversal. So one leg, two legs on strength, find that new channel, right, and sell off the high of that channel on the way back down. If not, right, if we just kind of run here a little bit, yeah, not much has changed. Failure, strength, pullback, right, and pullback goes right back up again, right, as we come off of this level of support. So really, really good example there on the Emini of how we have to respect the momentum of the market. Another market now moving higher here with momentum to the bull side is the Nasdaq. The Nasdaq is bullish and trading at the low of a spike and channel pattern. Spike and channel patterns are relatively easy to trade once you learn how to trade them. The plan is to wait for a deep two-legged pullback and buy going back to the highs, right, tomorrow morning. Now, what are the keys here? Whenever we have a spike and channel pattern, we go up, right, into that right into that spike in channel. One of the keys to a spike in channel is trying to go down into that kind of first pullback area, what I call the base of the channel, right, where the channel and the spike collide along with that first pullback. Most of the time, these spike in channels, they're going to give you some pretty significant pullbacks and then go back up to retest the high. What makes a spike in channel pattern really tricky is that it looks very convincing when it pulls back. So don't be surprised here, right, as we look at this spike and channel here, right? Don't be surprised if we see a pretty strong move lower, right? And then start buying that pullback from there, right? This is why I have that battle zone a lot lower on this chart, right? Than just pinning it right to the low of that channel. Right? That's the reason why, like on the S&P, right, I have the battle zone right at the low of that channel. This Nasdaq, right, is obviously a spike and channel pattern. I would love to see a nice move lower and then get a chance, right, to bring that market back up to retest that high. At the same time, you can see we're obviously trying to go up and retest this 72.58 level. Right? Who knows what happens, right? Got a lot going on this week, so it may also try to go higher here, right? We'll put a plan together for that as well. So as I dig in here on the Nasdaq, let's see what if price goes lower here first. If we get that really deep pullback, right? It really collapses down now. What's going to happen is the momentum is going to shift a little bit too far to the downside. And my plan is to wait for the 1 try, 2 try, strength, and then buy the pullback. This is a little bit less aggressive, right, than we talked about on the previous charts, right? On the previous examples, I'm buying, right? I'm buying that break. Okay, but in this case, because we have to get such a deep pullback to get into a buy zone down here, I'm not going to trust that seller failure. What I will trust, though, is after I see some strength going higher, I'm looking to buy that pullback. That's the leg I want to be participating in on the way higher. Right? Does that make sense, right? So when a shallow pullback, hell yeah, I can look for a failure right here. Right? That's a great looking failure pattern. You can see it right here, right? Down, up, pull back, and go. So when we just barely come below that moving average, sure, right? Seller failure into strength, right? And back up to retest that high. But if we're tumbling all the way down here, the momentum at that point is just too strong, and the bears will likely have the opportunity, right, to reverse that trend. What I'll wait for is 1 try, 2 try, get back up, and then be a buyer, right? Be a buyer as it runs back up to retest that high. Does that make sense? Right? So you always want to think about what is the momentum of the market telling me. I can do it right here, right? I can take a failure right here because the momentum hasn't moved very, very far to the downside yet. But if we really collapse, right, and move lower, again, that's why I said spiking channels can be tricky, but as long as you kind of know what you're doing. If we do see it really roll lower, right, don't freak out and look for the sell just yet. Look for the failure up, and then I'm buying, right? I'm buying that pullback on the way higher. Now, a failure may definitely result in that deep pullback, right? If the sellers can hold that move lower, now we go out, we connect these lows, connect that high, and you guessed it, right? We're going to sell off the high of that range, right? So I'm trying not to predict the reversal. I want to wait for that market to reverse, and then we can go selling, right, in the direction of momentum of that market. Very, very important lesson to learn on those, right, on this Nasdaq or on a spiking channel, right, overall. Now, I can see the green candle here forming. What if we keep going higher here? Well, if we keep going higher, we have that measured move, right? That measured move is really a triple measured move here. It's easy to see the buyers are likely trying to get up to that 72.58 area. I've got 1 leg, 2 legs, and 3 legs. It's easy to see that the buyers found their objective right there, and we have to respect that. So as far as being a buyer right now, I'm not too confident in being a buyer into that measured move because you can easily see, right, it was used as resistance now twice and couldn't break through it. So my plan would be my plan would be to let this market go higher and then try to buy it on the opposite side tomorrow morning, right? Skip buying into resistance. Let's buy at support instead, right? That'll be a whole lot more reliable pattern for you. So if the market keeps going higher here, look for that pullback. Also, keep an eye out for a spike in channel into a spike in channel. These happen all the time, right? A lot of times we'll see a spike in channel kind of break off into its own spike in channel. And if that's the case, we look for what? We look for trap patterns, we look for deep pullbacks below those prior swings as we go higher, right? And again, if you want to learn more of the nitty-gritty details of this trading strategy, grab that free trading class in the upper right-hand corner, right? You will not be disappointed. So buyers are trying to go back up and retest that high, right? Will they go up and then pull back and go from there? Will they go down, right? Failure strength and then back up from there, right? Or do we reverse and head back down to that 7,100 big round number? It's tough to tell. Right now, momentum is on the side of those bulls, so I'm looking for buying opportunities, right? In the meantime, let's keep going. How about some gold now? Gold is range bound and trading at the high of this multi-week trading range. Now, my goal is always to sell the highs of this range with a target going back down to the low of the range. But the strength of this recent push higher combined with the momentum developed from this rotation back to the highs, that tells me to wait for a second leg higher before I look for selling opportunities tomorrow morning. Now, the very first thing I think of when I see this range, right, is it's a wide range. Now, why does that matter? Well, remember, the key word about day trading is momentum, right? And if I have a really narrow trading range, right, if I have a narrow trading range, the momentum isn't really able to gain speed, right, as we rotate back and forth inside this range. In other words, I can be aggressive, right, buying low and selling high of this range because, again, there's no momentum, right? The momentum doesn't have any chance to really gather any steam. You know, it's like having a freight train just sitting there in the yard. There's no momentum. That freight train doesn't mean very much. But if you get that freight train running 60, 70 miles an hour, good luck stopping it. Okay, that's the momentum that I'm talking about. So when I have a narrow range, momentum is no big deal. Right? But when I have a really wide trading range, now it is a big deal, right? The momentum builds speed as we go lower. I can't just buy this low. I have to wait for it to slowly turn, right? And then I can start buying off of that low. Does that make sense, right? Because if you try to pick a bottom here, right, you'll get stopped out a few times before, right, the market then turns in your direction. There's nothing more painful than that, right? You try to call the bottom of this move, you get stopped out, try it again, stopped out, try it again, stopped out, try it again, and then what happens? The trade that you don't take because you're out of bullets now, right, or out of confidence now, that's the one, right, that finally runs higher without you. That's what I'm trying to help you avoid on these wide ranges. Well, now here we are. We're back to the highs here now. We've got not only a lot of momentum going higher here, right, but also the recent move, right? You'll see this on gold in a second. The recent move going higher is just really strong. So again, I've got to give it a little bit more wiggle room here, let it do its thing, and then, right, we'll look for that sell going back down into that range tomorrow morning, right? So as I look at this chart right now, you get a really wide range here, right? You can see here, as you can see, right, we go down off that high. What happens? They're going to keep running it. You got to wait for it to finish and then go back in. We go up. What do? They keep running it, right? The momentum is too strong. So here we are again. We go higher, right? Very, very big move going higher. Momentum is now definitely on the side of those bulls. And just recently, we see a strong move higher, right? It's not like it was whimpering back to the highs here. This is a very strong move as we went. So knowing this, right, knowing that we have a range, knowing that I want to sell back down to the low of this range at 12.99, we'll say, right, 12.9.1, give or take a few ticks there. I want to sell back down into this, but I just I don't trust with all this momentum, because you could easily say, well, isn't that a spike in channel, right? Didn't you tell me, Joe, to look for a deep pullback and yeah, that's the same thing we're worried about, right? So I'm expecting to see another leg higher here on the gold, right? That's the bottom line here. I've got a measured move target overhead, draw up, pull back, and go. There's your measured move resistance. So we get a lot of resistance up here. I'd like to see us once, twice, and then we can look for that failure, strength into pullbacks, right? And pullbacks, right? Going back down again. I'd like to see us selling high above that range, buying low below that range, and trying to stay away from, right, this no trade zone, which of course is the middle of that trading range. So what if price goes up? What if price goes down? What if price goes sideways? If price goes higher, and that's what I would expect to happen here, if price goes higher here now that will be that momentum now trying to exhaust itself. The moving average, of course, will come over, and what I'm looking for is a failure, if I can get this thing to draw up here correctly, a failure pattern, right? That failure, if I can get my Bob Ross skills going, right? My failure into strength into pullback, right? And then go from there. So I'm looking for that failure pattern. Okay, again, after we see the buyers try again, failure pattern into a strength, and then of course into a pullback, right? Going back down in. Let those buyers, right? Let those buyers get their hooks in this thing. Right? Let those buyers try to show us that they can hold this thing. Because for all we know, they could take this thing, right, much higher tomorrow. Momentum is definitely there. And again, with all the new stuff happening this week, gold is going to be under pressure. So we'll see, right, if those buyers take it higher here. If they don't take it higher, that's going to be my opportunity now to sell into that buyer failure. Buyer failure results in seller strength because buyers are getting stopped out. They have to sell their way out of that market. And then we can look for that move right now coming over, maybe some trend lines overhead to protect us, right? And we can look for selling opportunities, right, off of that moving average. So that's my plan if price goes higher. Now, if price goes higher and keeps on going, right? If we see this thing really jump on strength, well, now I've got no reason to be a seller anymore. I'm going to mark up those highs, bring it down to that low, and I'm looking for a new channel now. I'm looking to be a buyer off the low of that channel. Now remember, it takes a very strong market, right, to break out of a range like this. This is not a small range, right? So make sure you see very strong movement, right, going through that high here tonight if we're ever going to want, right, to be able to sell or to continue this market, right, going higher here for tomorrow, right? So up and go, new channel, buy that pullback, or up and failure into strength to the pullback, and then pullback going back down to that low. Now, what if we just drop, right? What if we don't pull back? What if we just drop here, right, back into that middle? I don't want to trade the middle, right? I don't want to trade the middle. And what happens in the middle is that we typically see the market kick back, right? It usually kick back, and you want to sell up around those highs. Okay, so if it does run back into the middle, you don't chase the middle, right? We don't chase the move lower. We stay away from the middle, right? And we look to sell up around the highs. You know, think of it this way. Imagine if you broke this chart, this range, right, into thirds, right? You know, we'll see there, right? So here's going to be your, right, your selling third, right? Here's going to be your buying third, right? And here is going to be your sitting on hands third, right? Right in the middle, right? Your middle third, right? Avoid the middle third. So if we end up collapsing, here back into that range, I don't want to sell in the middle third. I want to get up, right, and sell off of that high to finish off that move going back down in. Right? It's going to get nasty in that middle. So you want to stay away from that middle and be a seller up at that high. And then who knows? Maybe we find ourselves right back down to that low, one try, two try, and back up from there. Right? So of course, one try, two try, failure, strength, pullback, right? And go from there. Hopefully we don't see one of these that we saw earlier this morning, Again, a lot of news going on this week here, so gold is definitely under pressure, right? But we're trying to sell off that high, buy off that low, and avoid that middle. We got you covered there as far as the plan goes for gold. And then last but not least here, what are we going to do with this euro? Euro is range bound and appears to be moving into a large triangle pattern ahead of Thursday's highly anticipated ECB announcement. Knowing this, my plan is to fade the breakouts, buying low, selling high, right, avoiding the middle, and focusing on failures until we see proof of a successful new trend tomorrow. I think this chart needs to be zoomed out a little bit to really get the big effect here. You can see we came out of a trading, oh, sorry about that, wrong button. We came out of a trading range, if you recall, right, from last week. The market ran higher here. We see this big, strong spike in channel, right? And we talked about this, right? What happens on spike in channels? They usually pull back really deep, right? That deep pullback, don't trust it. Failure, strength, pull back, and go from there, right? Remember this? We talked about this. This is the exact same pattern that we just talked about on pretty much everything here so far. I'm not making this stuff up, guys, right? It doesn't require indicators. Well, a moving average, right? But every charting software should have it. Nothing fancy. All it requires is to learn how to find and trade these patterns. Once you learn how momentum works, and once you learn how these, for example, spike and channel patterns work, you're going to find yourself on the right side of the market a lot more than you did before. Now, let's zoom back in here now, right? But now we've got that spike in channel. We've got the big two-legged pullback. We got the failure, strength into pullback going higher here, but look what's happened now. Where are the buyers trying to go? Yeah, the buyers are trying to go back to retest that high. But look what's happened. They went once, couldn't do it, and then, the dagger in the heart, right? They got a lower high, and then they confirmed that trend line. Okay, now here is a very, very important lesson that I learned the hard way, and if you're smart, you'll learn it by listening to me right now. Anytime you have a trend line with 3 tests to it, okay, not every trend line is going to have 3 tests to it, right? A lot of times they have 2. Anytime you have a trend line with 3 tests to it, you've got to take it seriously, okay? Because obviously what happens is it goes up, pulls back, goes up, pulls back. At that point, this could easily blow right through that level. But now we've got proof. Now we've got proof up and then back down in. Yeah, we've got proof now, right? We have proof now that for whatever reason, these buyers are struggling to get back up to retest that high. Now, we're not bearish yet by any means, right? This market has not collapsed here yet, heading back into that range yet. So it's far too early to call this a bear market. So what I'm doing is I'm going to draw that trend line off the high. I'm going to draw a trend line off the low. And that creates what I would anticipate to be a triangle. Now, we've seen this millions of, well, maybe not millions, right? But at least thousands of times, right, in my trading career. And that is when we have the ECB announcement on Thursday, get ready for some hairy price action, right, as we lead up to it. The ECB is not the Fed here in the U.S. The Fed in the U.S., man, they shoot first, right? Think about it later. The ECB, they don't make moves right? They make them very, very reluctantly. It's a different kind of attitude at the ECB. The Fed, right? They're a cut twice, measure once type of Fed. The ECB is a measure 3 or 4 times and then maybe cut once, right? So they take it a lot more carefully. So the fact that we're hearing rumors that Thursday they're going to be establishing plans to wrap up QE, it tells me that I'm expecting a range as we go into it, because I'm sure a lot of traders are going to be a little bit paranoid about that Thursday announcement. So knowing now that we have this rising support, this falling resistance, yeah, let's use this now as a range. So basically, just like we had on gold, but this is a triangle. Okay, now here's the trick when it comes to a triangle. Right? Here's the trick when it comes to a triangle. The triangles are all about the swings. Grab this up real quickly here and we'll talk more about it, right? So triangles are all about the swings, right? The swings. Swing lows and swing highs. Okay? Triangles are all about the swings. And the goal is to get it going down around those swings and then back up. right? Get it going up around those swings and back down, with the target being back in the middle of that triangle, right? We want to avoid that middle. So as I look at this chart right now, where are my swings? I have swings here, I have swings here, I have swings here. Okay, so ideally, I want to get down in this area at the very least. In fact, I was tempted to call this the battle zone rather than the battle zone that I have marked up already. So the goal is, whenever we have a triangle, is focus on those swings, right? Swings. The upside is pretty easy. Those are already marked up. If we go higher here, it's one try, two try, failure, back down in. You want to be thinking about this pattern. One try, two try, failure, back in. One try, two try, failure, back in. One try, two try, failure into pullback, back in. Now, sometimes you've got room for that pullback, right? But if it goes like this, one, two, and down, right, there's no room up here to be buying a pullback, right? You'll take that long off the failure, but that's it. If we really run here now, one try, two try, well, hell, now we can go failure, strength, pullback from there, right? Now we've got more potential to buy back up into that trading range. So buying low, selling high, avoiding that middle, right? The middle right about here, stay away from that middle. One try, two try, back up in. One try, two try, back down in. That's going to be our key. Now, I don't expect to see a breakout tomorrow, but we got the, we got the old, but blind date, right, between Trump and Kim. I can see the internet memes right now coming out of this summit. The bottom line, though, is that who the hell knows, right? We get the euro. It could easily, right? We get a spook tomorrow morning. Hits the dollar. It hits gold. It hits the euro. What would a breakout look like? Strength, pullback, strength, right? Strength, pullback, strength. Strength, pullback to the moving average, right? And strength. That's what a breakout looks like. And if we see a breakout, we don't chase the breakout. What do? We buy, right? We buy support, right? If we see a strength, pullback, strength, okay? Again, strength is the key word there. Find that new channel. Don't sell it low. Sell it high, up at resistance, right? And we're trying to come down from there. All right, so be very careful tomorrow trying to predict reversals. If it goes strong down, make them prove it. Because if it doesn't, it's going to go right back up into that range tomorrow morning. And I would say out of all these markets, the euro could be the one that really makes you want to pull your hair out this week, because they're making us wait until Thursday to get that ECB announcement. Hopefully I'm wrong, right? Hopefully I'm wrong. And as always, I come out every morning in my trade room. I'm always optimistic, right? But I'm always realistic, right? Because I do know we do have a lot of news here this week. So like I mentioned earlier, expect to see some periods of very slow price action, right? But as those headlines come out this week, we should start seeing some really great price action. Don't forget, I've covered a lot in this video, and I know I'm running late on time. So thank you so much for sticking around with me tonight. Join our free trial to learn more about everything that we do here at School of Trade. We've got a great beginner, intermediate, and advanced course here at SOT. You can start as a beginner and work your way up to the advanced, or you can jump in here, right, face first, and grab that advanced membership and come trade with me tomorrow in our trade room, right? Wherever you are on your journey of your trading career, whether you're a beginner and you want to get the basics, or whether you want to jump in and trade with me tomorrow, I've got a place here for you guys at School of Trade. Don't forget, grab that free trading class in the upper right-hand corner. Get registered for that. And in the meantime, have a great evening out there, right? Rest up. Big day tomorrow. Be well out there. Be nice to each other, will ya? And be here tomorrow morning. Adios, amigos.